Welcome to The Explainer. Today, we're looking at a literal tidal wave of disruption that's currently crashing into our global financial institutions. If you've been watching the markets lately, you know that the ground beneath legacy finance is shifting, and it's shifting fast. The catalyst? Anthropic's newest artificial intelligence release. Over the next few minutes, we're going to break down exactly what these new AI agents are, how they're fundamentally rewriting daily operations, and why this rollout is sending massive shockwaves through both market valuations and the broader tech industry. So, let's get right into the visuals.
Okay, let's dive into this, because this quote right here perfectly sets the stage. Anthropic is coming for Wall Street. This isn't just some casual observation. It's a stark, very real warning echoing from industry analysts right after Anthropic's latest product drop. For a really long time, the whole discussion around AI and finance was mostly theoretical, right? Like talking about what could happen years down the line. But make no mistake, the future has officially arrived. The shakeup isn't pending. It is active right now.
Section 1. AI agents hit Wall Street.
To really wrap our heads around the sheer scale of what's happening, we have to look at this critical number, 10. Anthropic hasn't just released one experimental tool to see how it goes. They've deployed roughly 10 new, completely distinct AI agents equipped with frontier capabilities. And we need to be clear here, these are not your generic run-of-the-mill chatbots. They are purpose-built, highly targeted tools aimed squarely at the core pillars of the financial world. We're talking banking, insurance, asset management, and fintech. It's literally frontier-level intelligence being injected directly into the specialized tasks that define these incredibly complex industries.
Section 2. Automating pitches and compliance.
I want you to imagine you're a senior banking executive waking up to this totally new operational reality. The absolute burning question on your mind is exactly what we're looking at here. How does this change daily operations? Because it's one thing to hear buzzwords like frontier capabilities, but what does that actually mean for your analysts, your compliance officers, and the managing directors right there on the floor today? For an exec in banking, technology is only as valuable as its ability to reduce friction and speed up execution.
Well, these new tools are designed to instantly obliterate some of the most high-friction, historically manual tasks in finance. Let's look at the first one, drafting client pitches. Normally, this takes entire teams of junior analysts days of pulling data, formatting decks, and basically kissing their weekends goodbye. Now, the AI agent handles that heavy lifting. Second use case, flagging items for compliance review. Navigating financial regulation requires intense, painstaking manual scrutiny. But Anthropic's agents can now proactively scan and flag potential compliance issues. That expands the raw, everyday capabilities of banking, insurance, and asset management teams literally overnight. It completely reshapes the speed at which your firm can operate.
Section 3. Legacy finance under pressure.
And this brilliantly illustrates the immediate real-world fallout. Because when you introduce tools that drastically increase internal operational efficiency, the external market reacts immediately. The fallout is both brilliant and, frankly, brutal. Absolute titans of legacy finance and financial data, companies like Morningstar, S&P, and Moody's, saw their shares come under intense pressure, triggering overnight ripples across the entire industry. Analysts are neutrally reporting this as basically an apocalypse for legacy finance stock valuations. The market is looking at Anthropic's new pitch drafting and compliance capabilities and calculating in real time just how quickly these AI agents might destroy the traditional moats these legacy firms have enjoyed for decades.
Section 4. The blueprint for knowledge work. But let's zoom out for a second. If we just look at the finance sector, we are totally missing Anthropic's broader strategic vision. Anthropic's executives view Wall Street as a blueprint. Finance is not the end goal here. Because the finance sector is incredibly data-heavy, highly regulated, and relies on complex analysis, it is the ultimate proving ground. Think about it. If Anthropic's agents can successfully automate high-stakes compliance reviews and bespoke client pitches in asset management, it proves they can automate complex knowledge work absolutely everywhere. It's a crystal-clear signal that Anthropic is broadening its influence way beyond Silicon Valley and straight into the core of the global enterprise.
Section 5. The pre-IPO OpenAI rivalry. So the crucial point is this aggressive push into enterprise finance does not exist in a vacuum. It's a massive strategic maneuver in the broader AI tech wars. While Anthropic is aggressively scaling these enterprise finance tools, OpenAI is competing fiercely for that exact same enterprise footprint. Why the sudden rush to completely dominate Wall Street workflows? Because both of these companies are racing to bolster their revenue ahead of eagerly anticipated IPOs. Capturing massive, incredibly lucrative enterprise contracts in the financial sector directly fuels those revenue sheets. They have to prove to the market that their AI isn't just some fun consumer novelty, but an indispensable revenue-generating enterprise engine.
Section 6. Powering up with Google.
Of course, to support this massive surge in AI demand across the financial sector and beyond, you need immense physical infrastructure. And that creates a truly fascinating dynamic. Anthropic is expanding its partnership with Google. What makes this relationship so complex and honestly just interesting to watch is that they are simultaneously rivals and investors in each other. Google has its own massive AI ambitions, yet they are deeply financially intertwined with Anthropic's success. It's a wild balancing act.
Now, what's really interesting about this slide is this staggering number, $200 billion. According to reporting from our sources, Anthropic is earmarking $200 billion to invest in Google Cloud and chips. Just let the sheer scale of that number sink in for a moment. That is an astronomical commitment to compute power, and it directly validates the incredible scale at which Anthropic expects these AI agents to actually be utilized out in the wild.
Breaking this down a bit more, they're operating on a 5-year timeline here, and the primary goal is to drastically build up their computing capacity. The underlying strategy is incredibly clear. Anthropic is banking heavily on the immense popularity and demand for its AI products. If banking executives adopt these tools for compliance and pitching at the rate Anthropic expects them to, the computational drag is going to be massive. So this Google partnership is really the foundational infrastructure play required to just keep these new financial AI tools running seamlessly.
So we've seen how legacy firms are feeling the heat, how daily workflows are being completely automated, and the literal billions being spent on infrastructure to support it all. But I want you to remember that blueprint concept we talked about earlier, because if the highest friction, most complex tasks in banking and insurance can be handed over to AI agents today, your industry's complex workflows are inevitably next on the roadmap. So, I'll leave you with this question. If Wall Street is just the blueprint, what industry is next? Thanks so much for joining me for this explainer, and definitely keep your eyes on how this technology continues to scale.